This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 10:09 a.m. on Mother's Day, May 10th, 2020. Welcome. This is a Clueless Trading member ACS advanced coaching session available for free. This one is a free session to all our great members. This session will be recorded, uploaded to the Clueless Trading YouTube channel. And as you all know, prior to the upload, which takes a little bit of time these days because of the heavy internet traffic, you can always listen to it, and everyone else can listen to it when I put it up on the real-time Twitter feed. You have to click the link for GoToMeeting, and you can listen to it. And the upload on YouTube will be a bit later on today. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice, and we shall begin. So what we're going to try to do today, given respect to time and given the fact that it's Mother's Day, we are going to go through a bunch of stocks, because that's really what we do, right? We're going to do a bunch of stocks, and I'll try to explain some of the structures. I'll try to explain why I like those things, why they have worked out. We have had lots of large winners, and the market has been obviously very strong on the reflex rally. As you know, I've been talking about it for months, if not weeks now, and of course days, and you guys know it very well. The real-time Twitter feed is where all the action happens, and if you track it, if you write down or act on the alerts that have been put in place, then you know exactly the ones that we are trading. And there's a lot of stocks in the market, right? So it's not possible for anybody, to trade every one of them. It's not possible for me to trade every one of them. But we try to select the ones which are the fastest movers and which will deliver the largest amount of profits. And I think you all agree with me on that. So saying all that, let's begin. Okay, so diving in directly, let's start looking at a few of, this is obviously the overall market, as I've been explaining. You guys know that by now. Listen to my webinars, cup and handle, breakout, and this is where we were on Friday, with the markets up 455 points. Just this candle, just this green candle is 455 points on the Dow Jones Industrial Average. Pretty incredible, huh? And here's your blue line, which is the Fib 50, Fibonacci 50, and all these will be discussed later on tonight, approximately around 9 p.m., 8:30 to 9 p.m., around that time, when I do my strategic Sunday webinar. Very important to get an idea of what we are expecting. And we have been overall very, very correct on the broader direction of the market. S&P 500, the E-minis on the daily, which is the S&P 500 E-minis futures, and that's it. So if you guys can join, then that's great. If not, you can always listen to it later. Are you guys with me so far?
Yes.
Sounds good. And I think Mr. Matt has joined us, correct?
Yeah, just got on, Frank.
No problem. And somebody else joined us. Who is it?
Ray Carrera.
Hey, Ray, how are you, sir? Okay, good. So let's talk stocks, all right? That's good. Today's format, we're just going to barrage through a bunch of stocks we have trading, stocks we might, stocks that you might have missed, but whatever. So that's okay with you guys?
Yeah, sure.
Yes, sure.
Okay,
Good.
sounds good. All right, so let's start off. Let me broaden the screens. And like I said, the detailed explanation of market directional bias, predictive analysts, or predictions, what'll happen, that's all tonight, Sunday's webinar. So leave it at that. And again, all right. So let's start off with a random name, Square. Just picking one. I'm not picking in priority, like, okay, which one worked out the best or whatever. So here is a picture of Square. Now we've been trading Square all the way from $50, $60. And the stock is now at $76. So that's more than let's call it for 50, 76. You're talking a 50% move on the stock. 50% move on the stock, which generally is the average stock ROI or return on investment if somebody's buying stocks. And many of our traders actually buy stocks, not just options. I do certainly at times, both stocks and options. And that all happened from 8th of April, 1 month, 50% return on the money. Nothing unusual. Markets have jumped up strongly as I've predicted. I've been dead right on that. So Square has been a huge beneficiary of that. So first we're going to look at the bigger picture of Square, and then we're going to dissect it and see the games that the machines or the algorithmic high frequency trading computers play, on these type of stocks, especially after earnings, which is really important to us. They bring the stock down 3 or 4 points, people. Matt, you know that. Hope you did well in Square. So, they bring it down 3 or 4 points, and boom, then they run it. They run it. Now, somebody said, hey, is there an exact way to play it? Sure, we call it a reversal trade. And we're ready for it. So the bigger picture of Square, and let me get the pen, is showing us that the stock has room to move higher. That's what the bigger picture is showing. Intraday volatility, which is basically pulling, markets open down 600 points. Company like Square will be down 2 or 3 points. Options will be down about 40%. We have to handle all that stuff, but we have to keep an eye on the bigger picture. Now, on a fundamental basis, because I do, there's a reason why I buy these things, not just charts. I have to like the company. And the reason we like Square, which you all know, is because it is the future, the digital currencies, online payments. Square has also in the process of getting an FDIC bank license. They'll become a bank, like PayPal will become a bank. Wouldn't that be great? I do all my business on PayPal, all my transactional business for my service, and it's been a fantastic experience. So I'm just giving you a simple reason. Aside from that, there are many other reasons why Square is one of the future of digital payments. People like Visa, people like MasterCard, they're great companies, but they are, when it comes to the innovation and the technology, the companies like Square and PayPal, naming the 2 biggest leaders, they're far ahead of that. They are what we call the second generation or the version 2. So, okay, so that's the big picture. So bottom line is, this is Square. And the high on the stock is $85 to $87. You can see that. This is a daily chart. The stock now has broken out in a tremendous way. This was the level that the stock actually broke down hard, and that was back on March when the coronavirus thing hit the market like a bomb. So it has now recovered everything in 2 months, sorry, and this is where we are. So one of the ways you look at it in a simple way on a stock like this or any other stock is, somebody will say, oh my God, the stock has gone from $32 at the bottom when the market basically hit rock bottom back on March. Square actually hit rock bottom before the market hit rock bottom. Market hit rock bottom around the 23rd of March, and Square had hit about a week earlier. Okay, right there, and then it started bouncing. So somebody will say, hey, the stock's up from 32 to 76. That's more than 100 and what is it? 76 divided by 32. It's up 137 points from here. 137% from here to here. 137%. Isn't that a lot? That's crazy. Well, it's not crazy, because one of the ways you look at it is one of the simpler ways you look at it is, first of all, the stock should never have been at 32, right? That was just a full-scale bloodbath, and like I said, these type of things will bounce back. I said that many, 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 many times, okay? These are great companies. Well, they're going to disappear. The more the world is changing, and the world has changed. It's not going to go back to the same old stuff within the next couple of months. Maybe in a year, 2 years, and maybe in a year, we're going to be back to complete normality. But certain things completely changed, and online payments, digital payments, contactless payments, they're going to keep on growing. So when you think about it, the fundamental reason behind it, it's almost a no-brainer. Do you guys agree with me?
Yes.
Exactly. So bottom line is it never should be here. Now, one of the simpler way of looking at it, that it shouldn't be here, and it shouldn't have been here. And so now it's recaptured back to where it completely crashed from, which is the 70 level, 69 level, the gap fill that I talked about for weeks and weeks, all right, and days and days. So now it's well above the gap fill. So one of the simpler way of looking at it is, hey, this is where the real, and this is your downtrend line, this red line. So this is where the real action actually started. Now, they came up with earnings, they gave their projections, and the market went with it. So basically the journey doesn't start here. And this same thing applies about the stock market too, by the way. So the journey didn't start here. The journey actually starts here. So let's say somebody completely missed out on the whole move from 32. Well, I wasn't there at 32, okay? I was mostly there at 50, 56, $60. You guys know that. So so let's say somebody completely missed out on making a single penny on Square. Well, don't be sad. The second leg of the journey is starting here. So now that we have broken out of this major major downtrend line, this becomes what? This line here around the 69 level, 70 level becomes what?
Support. That's a new support level.
Exactly. Thank you, guys. So it becomes support. Previous resistance becomes support. That's the way it works. Basic technical stuff. Previous resistance, where the stock came close to back in early April, came close to back in late April, and got rebuffed, right? Technical patterns didn't change. I stuck with it. So now that it's taken that out, so this was the resistance, now it's become support. So as long as the stock holds support between $67 and $70, like a $10 move down, it's going to be fine. This is, I'm showing you the longer term picture of what the stock can go. So saying all that, if it completely breaks below that, then that's a different story. Then it's no longer viable. It's no longer a trade. You can short it if you want. It's a dangerous game, trying to trade short these stocks. They're very powerful, but it's not something that you would want to actively trade. So saying all that, the journey is beginning now from the $70 level. You can clearly see here, if you look at the range, upper end of the range is 85. So looking at it from a technical standpoint as a swing trade, I'm not talking about 15 minutes, 1 hour, a certain day. The stock, in my opinion, will go to $85. So how does an option trader play this? They can buy something into June. They can buy into July strikes. You can buy the 80, 85 strikes. Now, for newer members who have joined us, who are still learning how to trade the game of options, huge rewards, huge risks, but managing the risk can deliver huge rewards more than huge risks. You guys know that. So if you buy a strike, and I want a new member to answer, somebody new, if you buy a strike, let's say July monthly options expiration, third Friday of July, I don't know the date yet, and you buy the 85 calls, is it going to cost you, is it going to be cheaper or more expensive than buying the June, let's say early June, because Square trades weekly options too, the June 80s? Which one is going to have which one's going to be more expensive, Mario?
The June.
Exactly, the June. So because you are buying, you're buying close, near the money, and you're buying the strike close to the money. Now let's take a look and see the differences. Because what is happening now with the stock markets is the machines know which stocks are going to be, they kind of know with artificial intelligence. Don't ask me to explain all that stuff. But so they keep the premiums very high. So let's take a look. I'm going to pull it up on my other screen and then bring it down of how much options cost. Bear with me 1 second. I will bring that screen in. And bear with me. Clean the screen out a little bit. And let's take a look at the, okay. So June 19th is the next monthly options expiration. Well, May 15th is this week, Memorial Day. And but let's look at the June ones. And we look at the 80 calls. How much do they cost? $3.70, $3.80. Not bad. Look at the open interest. Everyone understand open interest? If somebody doesn't, just raise your hand and let me explain to you. It's very important to get an indication.
Yeah, I'm not 100% on that, Frank.
Okay, open interest is very simple. It's the amount of calls which have been bought at that strike. Now this is saying that there are 27,000 calls that are sitting. And this number is pretty accurate. There are other exchanges and stuff. I can't really explain, which have, I don't know if this is the exact true open interest, but this is the most accurate one. How about that? So what it simply means that there are 27,000 calls that are sitting at the 80 strike for June. Everyone understand that?
Yes.
Yes.
Now, a lot of the times, and tell me if you guys have noticed, I mention heavy call volume versus open interest. You guys have seen that type of post that I put out there, right?
Yes.
Okay. So what that means is that on let's say open interest is this is not a good example, but let's say open interest here on the is 5,000, and sometimes I will notice that there are 8,000 calls being bought, volume. Now they could be buying and selling, but I'm looking at it from a if the stock is moving higher, I'm looking at it from a buy perspective, like that's what's being bought. So this is called the volume. I'm just giving you an example versus what the open interest is. So let's say a open interest is 5,000 and 8,000 calls have been bought that day on a strike of I'm just picked a random strike of 72.5 calls. Is that positive or negative, guys?
Positive.
It's very positive, exactly, because you have a certain inventory of calls that were there, and then 160% more is getting bought that day. So that is showing you the flow. Okay, and there are option services and stuff which are looking at flows all the time. Like, where is it? A lot of the times you get an early indication, like huge open interest, volume detected versus open interest. And the Najarian brothers, they have that big service, and they talk about it all the time. You know what I'm talking about, right? Unusual options activity, they call it. So that's their business. They get a lot more data, like much more specialized, but still. So I look at that. It is not a perfect sort of indicator or anything, but it gives you an idea. Because if everyone looked at the same thing and everyone knew, then obviously it's kind of old news, right? But it's good to detect. So here we have 27,000 sitting there, and 1,660 calls were transacted on that particular day. So just something important that you guys should all know. And you can check this on your side anytime. A lot of the times traders will look to see where the heavy activity is, and that's where they go in. Where is the next open interest? Big one. 26,000. Where is that? At $90 for June. Do I think that it can go to $90 by June? Yeah, I think so. I think so. It's gonna blow past 85. I've said this stock, Square, in my opinion, is a $100 stock. Okay. Where is the next open interest that's big? Well, those are the two that shoot out, 27,000, and then the next one is 10,000 contracts sitting at the 85 level. And as we get closer towards, as we cross over into June, obviously these numbers will, in my opinion, grow. And these numbers change. Okay, so I explained all that. So what we wanted to originally look at was the 80 calls. They cost $3.80. Okay, so let's take a look to see how much the July ones will cost. So with the July, we are looking at the July. What we were supposed to look at? 85 or 90 strikes?
85.
85. Okay, 84. We'll look at both, 85 or 90. So let's go in. And we go into wow, there's no July? How strange is that? It goes from June straight to September. Wow. There's no July or August. I wonder why. Can anyone guess why? I kind of have a feeling like, why? It's very unusual that 2 months are missing. Why do you think that's how it is?
July.
What do you think? You guys are smart. Like, think. Why? Come on, guys. Somebody give me an answer.
There's too much money to be made during that time period.
I'm sorry, one person at a time. Go ahead. Go ahead. Why do you think there's no July or August and it jumps to September? Huh? Just give any answer. Come on, guys. Just exercise your brain. Just give any answer, right or wrong.
End of year?
Vacation.
But no. Stocks don't take a vacation.
Could it be the end of year?
No.
Corona's going to be settling down.
Corona, God willing, will be down. But what's that going to do with it? The Square's business is going to fly.
Maybe
I think
unpredictable.
no, that's not an answer. I think this is the answer.
People aren't selling calls at that time period because they figure it's going to be.
No, it never happens. Calls and puts options trade 24/7 heavy all the time. Even slow markets, there's no vacation anymore. Okay, in the old days they said, oh, volume's low in the summer. So what? Calls and puts traded all the time. Maybe the company's getting bought out. Think about it like that. Maybe the company's getting bought out. Sometime by June or September. That's why they don't have that. I don't know. I'm just throwing out an idea. So exactly, I'm serious because this is very odd unless I'm missing something. So at this point, we can't buy the July ones. We can only buy the June ones. So let's focus on that. All right, we covered that part and we're good. Now, it's possible. I'm telling you right now. So looking at the stock here, very easy to understand, nothing really more to say, 85, and in between, you get some red candles, intraday and all that stuff. Now, let me show you what the machines do to these type of company right on earnings. So here's earnings on Square, and we've been trading Square for a while now, right? Just once a week, twice a week, we've traded Square a lot. So look what the machines did. And this is something you all have to understand big time. And this is unpredictable. This is where it's unpredictable, but at the same time. So here's the come with earnings. And don't try to super analyze earnings. Yes, headline numbers might say, the strong revenues, raised guidance, and the next thing you know, the stock is down like $10. You're like, what the hell's going on? So the stock was 69 just this week, Wednesday. Okay. because Friday I had some family stuff to do, so I wasn't around. It was a fantastic day. I was selling stuff, bought some stuff off my iPhone. I was like loving it. Great day on Friday. Look at that, power. So basically, the stock 69, they drop it all the way to 62. They drop it all the way to 62, $7. Looks like crap. That's 4 o'clock, right? Right when the earnings came out. Machines kick in full gear. That's the reason why, if you own something, you gotta watch, and if you have that as an earnings trade, you gotta watch the candles for any type of reversal pattern. It is not hard. And if it is a reversal pattern, we can't obviously buy options after hours, but you can buy 10 shares. You can buy 100 shares. And, whatever. You can buy 1,000 shares. It's up to you. Whatever you can afford. And let's say you bought around 62, 63, and watch the 15-minute chart and watch the 5-minute chart. Right after earnings come out on a stock that you have a position in. So you're mentally prepared to jump into it the following day to add more options, or you buy stock after hours. So let's say somebody bought 100 shares on their trading account at $62 to $64. So they put $6,400 that they bought on a day trading account, which is eligible. You bought it. Let's say you bought a margin. So you put 32. If you bought $6,400 worth of stock, that means 100 shares. 100 shares. And I'm asking new members, just so you guys know. After hours, you can trade till 8 p.m. So if you put 6,700 or 6,400 shares on a margin account, how much actual cash are you putting in? Are you using?
3,200.
3,200, correct. That's right. And if you have a day trading account over 25,000, which a lot of my traders do, then you are putting, 1/4. You're putting 1/4, okay? Because day trading accounts give you 4-to-1 buying power, right? So just so you guys know, 4-to-1 buying power. So if you have 25,000, they'll allow you to buy $100,000 worth of stock. So you have 4-to-1, 4 times buying power, BP. Options always have to be paid in cash, but I'm talking stock wise. So let's say you bought 100 shares, $6,400. You paid $64 for it. By the time the market opened the next morning, 9:30, the stock is at 75 to 76 by 10 o'clock. How much money did you make? You made $6,400 here. You bought 100 shares, and you sold it at $7,500. Forget about the options. The options turned around and went through the roof. Options didn't turn around. Yeah, options were already opened higher. So you made yourself $1,100 right at the open, and plus maybe you made another $1,000 on the options. So net, you cleaned out maybe $2,300 or $2,200 right by 9-10 in the morning. Is this like an unusual thing? No, we do it a lot. So watching the purpose of this thing is just to explain that these you got to watch the after hours action. Very easy to do. Very easy to actually. It shows very clear on your iPhones, or basically the Thinkorswim app on any one of your smartphones. I use iPhone, so that's the only one I can talk about. You can see the candles, bang, bang, bang. I show a lot of massive reversals that start sometimes after hours, or they hold the stock down. They could have held the stock down here. They could have held the stock down here. Like they could have held the stock down maybe here till the market opened. It's happened, and then they run it. You guys seen a lot of these type of reversals, correct? That I've shown?
Yeah.
A lot. It's not like saying every one of them will do it. So watch reversal patterns, because reversal patterns, by looking at simple candlesticks, can deliver a large amount of profits in your pocket, both in options and in shares. Okay, so that's just want to give you the sort of the games that are played. And this is a small example. I've seen stocks down $40 and they turn around and they go up $30. We have had quite a few of those recently, and the names will come to my head. So PayPal is the same story, all right? So let's take a look at PayPal. They had pulled the stock down. They actually held the stock down, the machines. Took people out, if I remember correctly. Let's take a look at it. This is a very important example of trading. So PayPal, this is what they did. Company came up with earnings. Company came up with earnings around 128, 129. They dropped it to 120. They dropped it 10 bucks. Then comes right around here is when and then they started running it. They started running it right after that. And the stock basically went to about 138, 139. I was watching my phone. I'm like, nice, nice. Okay. Bought a couple of shares here, had my options. Thursday comes around, 9:30, the market opens here. And then immediately they run it another 6 points and take it up to 148. Again, same story. So right here, they clobbered a lot of after hours players. They took them out and then they ran it. So let's take a look at the chart. This is another power company, obviously, PayPal, that should be on everyone's trading radar. Let's take a look at PayPal on the daily. See you later. Like really, see you later. This one, you see, I like Square more because it can still go up towards 85.90, right, guys? Like there's still room to move, right? So in this one, it's like it's taking out new highs. Let's take a look at the weekly. Holy crap. So when you break out a new high like this, Square still has room to move. This one has taken out a long-term channel going back to, look at the date here, going back to 2017. 2017, the stock was doing this since 2017. Wide trading range. Wide trading range. Within, then this was that falling wedge that I showed people back last year. That's why this line is drawn. It broke out of the falling wedge, went straight towards the previous highs, which was 121, 122. Let's call it 122. Pulled back hard during the coronavirus stuff. Went back into the channel. Remember, this is the channel. Long-term channel from 2017. Goes further back. And then it didn't wait. It just said, see you frigging later. And the long-term upper end of the channel has now, it punctured through. So the 140 becomes what, guys?
Support.
Exactly. It becomes support. 140 is support. Now, it doesn't exact. It can slip and slide. So for people who completely missed out on PayPal, on earnings or swing trades, whatever. In fact, I was the first one to blame that I didn't really pay PayPal that much on the swing trade side, mostly on the earnings side. It's been very successful, not just this time. Let's say we get another massive pullback in the market, which can come. I've explained all that. I'll talk about it tonight, and the stock drops down to 120. Then it becomes a huge buying opportunity. In the meantime, the short-term support is 140. So on a stock like this, you gotta project out and see like where it can go, and you can draw all kinds of returns. All kinds of patterns. And you can look at 150, you can look at 160, you can look at 200 bucks. But that's a serious move. So that's the difference between the chart of Square, which still has room to move back towards the all-time highs, and versus PayPal, which is already making a new ATH that's all-time high. And the momentum will most probably continue as long as the market remains, the momentum on the market stays higher. Are you guys with me so far?
Yes, Frank, got a question.
Yeah, of course. Go ahead.
Does the 120 now becomes like a support also for in case it will break if it goes back down?
Well, the 120 becomes a major support because 120 basically is also another trading range. Look, you can look at it like that. Okay, so there's a very wide trading range. It's $73 and 120. That's almost $50, right? $50. So if you add 122, remember I show that easy back of the napkin type of calculation. This is a 50 depth going back to October of 2018. That's $50. That's the depth of this wide channel, right? You guys with me?
Yes.
If you add 50 to 120, the stock goes to 170.
170.
Exactly. On a really bullish note, the stock can go to 170. And yes, this is major support because if the stock goes below 120, then that means something's really going wrong with the company. So that's, yeah, absolutely. But the short-term supports are 140 and 130 if you look at round numbers. 120 is like serious, like that's a 20-point drop. That's a serious support. Yes, exactly. Okay. Did that answer the question?
Yes.
All right. So let's look at other stock. Let's take a stock like a completely different type of stock, and that's also working out. Smile Direct Club. Right? Everyone, does anyone know what Smile Direct Club is?
No, I don't.
Okay. Anyone know Invisalign?
Yes.
Okay. So Smile Direct Club is a company. Look it up, please. Smile Direct Club. They came public. They came public in September of 2019, not too long ago. They actually do it yourself Invisalign. Like Invisalign is a very expensive process, right? Like they charge huge amounts of money, $5,000, $6,000, $8,000 to put those invisible braces in your mouth, and it takes a pretty long time to fix the teeth and stuff, right? That's what Invisalign does. Very profitable, been around for a while. I believe Invisalign has been around for more than 10, 15 years, right?
Yes.
Yes, exactly.
Yeah, it's
So
been around for a while, yeah.
yeah. So listen carefully. These are the type of companies they don't talk about much. So this Smile Direct Club was a very hot IPO. The stock opened up at 21, and then it did this nice little move like that. And so what these guys do is they get an implant of your dental, if your teeth, all that stuff. I believe it's done at one of their, at different locations, and then they send it over to their labs, and a month later, 2 weeks later, you get those braces that you basically put in and use yourself. In other words, Invisalign, they have to go in and you got to be at the dentist office for 3 hours, and they got to fix all the braces inside your mouth, and then you just you basically it stays there. This is basically the do-it-yourself version, and it supposedly works. So these are real companies. They're not some penny stocks. So what a great concept. It's like buying cars online. Carvana, another big winner for us. You guys know Carvana, right? It's the first company that you can buy cars through a vending machine.
Yes.
Exactly. So this is the Carvana of fixing teeth, braces. And if you follow the company, I posted the news. They just signed with Humana, Anthem Health, all the big insurance companies. That means the big boys are now validating their business model. And look at this chart. So I told you guys buy the calls. I told you around $1. They went to 75 cents. Then they went to $1.15. Nice move. You can buy a lot. Nice move. Yeah, they're not at $3 or $4, which I expected to go. But look at this stuff. So let's do the quick. Like I always say, and I've said that in my webinars quite a bit, guys. There's so many ways to skin the cat. You just don't have to trade the Netflix, the Apple, the Tesla, and Facebook. That's everybody's trading that. I'm not saying there's anything wrong. We make money on that stuff, like fast. But what about looking at other companies which can give you huge five or six bagger as long as you sit with it and don't have to trade it every 2 minutes? Because with the Netflix, I tell you to buy calls at 7. The next thing you know, 5 minutes later, it's at 10, 12, 15. Tesla, forget it. Okay? So there's many different ways to skin the cat. So you guys mentally have to sort of change. I'm not saying change your all the structure. You can have something like this, and you can have the fast movers, and then you can have some, you can have some slow moving biotechs which get bought out or slowly move and take off. Look at Moderna. The stock was between 19 and 24 to 25, $26 for weeks and weeks. I remember last year. And where's the stock now? 60. Right? So that's what I'm saying. So bottom line is, does this chart? I'm just curious. Just asking you, opinion from you guys. Does this look like a good-looking chart or a bad-looking chart? And just answer what you think. Never give an answer. By the way, very important for everyone who's going to be listening to my webinars, learning, training themselves, using their own brains to do what they need to do. And after all, finally, it's your decision. Never give an answer to satisfy what I'm thinking, because you won't know what I'm thinking. Sometimes you will. Give an answer which you think.
I think it's a
Looks
bad
good.
chart.
That looks
You
good.
It looks like a good-looking chart, right?
Yeah, it looks like a cup.
Yeah, exactly. It is a damn good-looking chart, because this stock, just stock-wise, in my opinion, is just breaking out of the first neckline of the cup. So let's do a quick analysis of this. Okay, so the stock was 21. It did this. This is nice. So the first neckline of the cup was here when the stock was at $6, $7. This is the second neckline, in my opinion, which is crossing right now, 8. Okay, depth of this cup is how much? From 4 to 8. What is the depth?
4.
Exactly.
4.
Add 4 to a powerful breakout, 12. What is 12? See how everything matches? That's the big downtrend line. See that? The big downtrend line, 12. I think the stock goes to 12. What do you think your options are going to be? Way up there. Way up there. And you don't have to like freak out and like we all do, like bought Netflix at like $6. Next thing you know, it's at 4 before it turns around and goes to 12. It's like, what? All right. So I'm not saying it's an easy trade. I'm just simply saying it's got a very powerful story. It's getting validated by the big giants, the Anthem Health, the Humana, the United Health. It's all in the news. They've blessed it. They're going to offer, covered their services. What more could you ask for? In the meantime, the second thing that you guys have to watch, definitely a cup, no question about it. This is the Fibonacci retracement. This is the famous Fib 50, right? The famous Fib 50 also is at 12. Isn't that amazing? So this is what we call a confluence of price, a confluence of major indicators, lines hitting there. Fib 50, downtrend line, a major cup neckline breakout towards there. So that's very interesting that it all happens to be all arriving, or the confluence of all these things arriving at $12. And if it breaks 12, the stock will hit the next Fibonacci level, 61.8, which is also shown here, which is 14.5. And I personally think the stock goes well above 22 as an investment. I believe their next earnings are going to be great. Let's see. Now, looking at it from, everyone with me so far? Any questions?
I was going to ask you, how do you trade something like that into the, next following months?
It's very simple. Buy long-dated options. Buy some common. Buy long-dated options. Let's look at the option structure on this. That's how you trade it into the following months. So let's look at it. Where's the options chart? Here's the options chain. Let's put it SDC. We're already trading it. We already have the June calls, don't we?
Yes.
Exactly. So that's how you trade it. So let's say we have the June calls, and the June calls are, that's why our position here says position, $1.15. My average cost is 85 to 90 cents. Percentage wise, that's pretty damn good. Okay? With an average cost of 90 cents, because I kept on buying it. I'm up roughly 30% on it. I expect a lot more, obviously. So, and I bought in the money. I mean, I actually bought the 8 calls. I didn't buy the 7 calls. Let's say you want to give yourself more time, not just a month. Then you look at, this is June, July. There is no August. So let's look at July. Let's say that look at the July. There is no 8 strike price on July. It jumps to 9. Why do you think that's the case?
Probably at 8 already, right?
Yeah, they probably, the options market makers are probably thinking, hey, it's going to go to 9 by July. I'm just giving you my, opinion. I'm doing this for a while. Here there is the 8 calls for June. Here they have 9. How much are they? About $1. About $1. Lots of open interest. Did anyone buy 10? Yeah, there's 7,622 contracts sitting at 80 cents with 235 baht. Yeah, that's the heaviest open interest for a stock this size. See that right there? 7,622. Guys, see that?
Yes.
Yes.
Exactly. When's the next one? The 6 calls. Yeah. So that's how you play it. You buy time and you sit there. And of course, if the stock jumps straight to 10 and your calls are up, what do you do? I mean, who asked me that question? Mario?
That was
I know.
Ray.
Okay. So that answers the first part of your question. That's how you play it. So did that answer that question?
Yes, and I think the follow-up is where you're going.
My follow-up is what?
No, my follow-up question is where you're going. Once you reach that level, then what do you do?
Exactly. So that's the follow-up answer I was going to give you. So you read my mind. So and this applies to any options. One second. This applies to any options, any stock. So as the stock is moving past 8, and we have the June calls, right? We have the June calls right now. As it's moving past 8, let's say it's 9, and it's moving, and that chart looks like it's, and I'll show you something very interesting about the candles, which is showing the buying pressure in the stock. What do? You sell the 8 calls. If it's moving towards 9, we'll be selling it at $2. So there'll be 100% return on the money. I'm just giving you a rough example. Could be more. You want to sell the 8 calls and you buy the 9 or 10. And those are cheaper. They're not going to be cheaper as the stock is moving higher. But if this one goes to, let's say, $3 or $2, this one will most probably go to $1.50. The 9 calls, and the 10 calls will most probably go to maybe $1. So you basically shift out. That's what we call a rollover into higher strikes. You pay less, you keep most of your profits, or if you want to put in the whole works in there, you buy more calls because you're paying less for it, and you move the strike as long as the directional bias is the same. Does everyone understand this very simple concept? It's not hard.
Yes.
That as
Yes,
the
sir.
stock is moving higher towards higher prices, you want to basically sell the current price if you want to, and then you move towards the ones that the stock is gravitating towards. So does that answer the follow-up question, Ray?
Yes.
No, seriously. I mean, it's a simple concept, but do you understand it? Because that's the
No,
purpose of this.
I understand it. The question that I had in my mind, but I think it's clear now, is all right. So why not hold the price that you initially purchased
Okay.
but then you risk the profit. You risk the profit that
Okay,
you've already attained.
I've explained this before. I'll explain it again. It's a very good question. You could sit on the 8 calls because they'll keep on like getting fatter and fatter. Of course. But you certainly risk the profits, because if the stock has just an intraday pullback, then you are basically shrinkage in profits. But that's not the whole thing. If as the stock, and I've mentioned this on a training video, options training video, I think you were on it. So refresh your memory, Ray. Okay. As the stock is moving towards that higher prices, the Greeks, or the implied volatility of those options, tend to be higher towards the higher price. In other words, your 8 strike calls, let's say, will be up 60% on a sharp move on the stock towards 9, but the ones which are the 9 strikes will be up 70%, because that's how options work. So the ones that you're sitting in the money will have a slightly lesser percentage return than the ones that the stock is going towards. So that's the real reason why I tend to pay cheaper and make more money percentage wise on the higher strikes that the stock is moving to. Does everyone understand that? This has
Yes.
to do with this has to do with options
Yeah.
characteristics. Okay, this has to do with options Greeks, alpha, delta, theta, implied volatility, all that stuff. And I have some videos which have explained all that. Please dig it up and listen to it. Okay, it's called options Greeks. It's the characteristics of the options. I have seen so many times that the long day. Let's say when we trade Tesla. Okay, so Tesla. Get this out. Why is this still here? Okay, so Tesla, if I buy the calls which are $100 out of the money, those things will be up maybe 150% as the stock jettisons there. Happened a lot. But the ones, if I buy close to the money, if I buy the 900 strikes, those will give me 150% on the ROI, return on investment, on those options, than if I buy the 850 calls. Did you understand what I said, Ray? Because I want you to understand. I don't want you to have any doubts in your head.
No, I got it.
So basically, that's just the way things work. Okay. And just sitting in the money in my thing, and let's say you own the June 8 calls and the stock is at 12, but you're just sitting there looking at the profits. You're really enjoying it, which is always nice to see. But remember, a profit is it's not a profit unless you sell it, unless you realize your profits, right? It's just unrealized profit. Unrealized profit, in my opinion, is just like a mirage. It's there for the taking. You don't take it, the market grabs it away from you very fast. Yes or no, guys?
Yes.
Yep.
Yep.
Yeah.
Exactly.
Yes.
All the time. All the time. So my point is that why when you're up that much, as it's heading that way, why not buy the cheap call? So if the market does grab it away from you, then you still have the bulk of your profits in the bank. It's just simple. Did you understand that, Ray?
Yeah, no, it just seems counterintuitive. You know, you're selling something that you bought at 80 cents and now you're going to rebuy it at $2. But
I'm
I
sorry.
understand.
No. You're completely wrong. You don't understand. You just said you sell something at what?
So you sell something at, let's say, 100% profit that you got at 80 cents to buy a higher strike.
At a cheaper price. I just explained that. You buy a higher strike at a cheaper price.
So you would buy a much higher strike, not so something like you bought at $8 and now you're going to buy at $9.
Ray,
Is going to be.
You're lost. Let me explain to you. Everyone, please have patience. I'm going to explain to Ray. You buy something at, let's say, let's forget, let's use real number, just normal numbers. Let's say you buy something at, you have an 8 strike on that. You paid $1. You're selling it, let's say, I'm giving you extreme examples. Let's say you're selling it at $3. So you have the 8 strikes, the calls. I'm going to call it at the strike price 8 at $1 you paid, and you're selling it at $4. Okay, So you basically put $800 here and you selling it at $3,200. Your profit is $2,400. You with me so far?
Yes.
Okay. The stock is moving higher. You roll over and you buy the 10 calls because it's moving past 10 calls. You sold this at 4. You most probably, the 10 calls, which were probably 50 cents at the time that you bought this, because the stock, we have to go with where the flow is going. I can't just randomly, I could have told you guys to buy the 10 calls, but I don't want to do that, is because I want to see how the stock is moving and not just jump the gun and say, hey, it's going to go to 10. But I'm seeing that it's moving in that direction. These are called expanding candles. Big money. It's getting fatter and fatter before it makes that move towards 10. So let's stick to this here. I want you to understand this. So you now want to buy the 10 the 10 strike price. They're not going to be $4. You most probably are going to be paying $2, because they went from 50 cents to $2. So how does that not benefit you? You're selling something at a higher price, and then you're buying a slightly higher strike, because that's where the general direction is, at a cheaper price. So let's say you bought 8 calls here at $1, and you buy 8 calls here again. You bought 8 calls. How much are you spending, Ray? How much are you
$2.
spending? No bullshit. $2. You're paying the options for $2, and you're buying 8 calls. How much are you laying out on the table? On
Oh,
the bet?
16.
Correct. How much did you? 1,600. How much did you cash out here? How much did you cash out here when you sold it?
3,200.
Correct. How much is sitting on your cash money market account right now?
$2,000.
It's 3,200.
Yes.
It's 3,200 minus 1,600 is $2,000.
I'm sorry,
12.
16.
1,600.
Yeah.
Exactly. So how do you not win? Because now if the stock does have turbulence, which markets always do, you have $1,600 that you can cost average and do whatever you want to do. That's why it's a win-win-win to do that rollover strategy.
Yeah, no, I get it, Frank. What I was trying to say is that it seems counterintuitive that you have something at $1, you're
And
selling it to rebuy at $2. That's the point that I was making. But I understand.
but
I
here, no.
yeah,
You see, it's not counterintuitive. You're completely wrong, and you need to break that mental chain. The stock is no longer at $1. It is at 4. So you're not saying, oh, I bought it at 1, now I'm going to pay 2. It is at 4. So that means you put it at 4 and you're buying it at 2.
right.
That's how you got to think. If you don't think like that, you're not going to make money in this business.
No. I get it. No, that's why I said it seems at first, but breaking it down like this, you realized, okay, you're paying $2, but guess what? You just cashed in on all that profit. So yeah, you're paying an extra $1 for a higher strike price,
Yeah.
but you just cashed in on all that profit.
Yeah. What I'm saying is, I hear what you're saying. I hear what you're saying. But I don't think like that. So I wouldn't know, But I understand what you're saying. But it was very confusing to me. It's no longer.
No.
It's no longer $1 to $2. That's
Right.
like really complex math, man. I can't do that. Just kidding. So anyway, that's the way it works. Everyone
Well,
with me so far?
thank you for explaining. It's clear now, so I won't
Of
think
course.
like that anymore.
No, you cannot think like that. That's crazy. All right. So, but good you brought that question up, because I'm sure other people will benefit from your question and the simple breakdown on what this rollover strategy is all about. It's very simple. You want to pay less as you're moving higher, period. Plus, on top of that, the percentage move, the acceleration speed of the ones which are the 10 strikes will be a lot faster than if you're sitting at $8 on the 8 strikes. That's what I try to explain to you. The momentum of a stock towards the higher thing, the long dated, the out of the money calls tend to give you a better return on the money as long as the stock is heading towards that direction. The in the money calls don't give you the same percentage, even though they're moving higher too. Does everyone understand that?
Yes.
Good, good. All right. So now this is one of the things I noticed, which I like a lot. The stock started to turn, and these candles are getting fatter and fatter. Generally, what happens in something like that, and this is called pattern symmetry, and this is where we're going to, end the session. It's 11 o'clock. And 1 second here, is pure pattern symmetry. See how the stock, when it was coming down, the candles were getting fatter, and boom, this is like the panic stage. Then they tried a small recovery, and then boom, another drop. So this pattern, in my opinion, will be exactly reenacted on the other side. So if that's the case, there will be an equal, and I don't make these things up, okay? I've done this, I've shown it to you guys many times. All of a sudden, I don't know whether it's a couple of days or whether it's a week, you're going to see an exact movement, a candle of this magnitude, which was from 8 to 11, almost to 12 actually, the Fib 50, happen here. Now, this candle, when it happens here, what color is it going to be, guys?
Green.
Thank you very much. Thank you very much. Okay, exactly. Now, if the thesis changes, if we start to see a rejection of this level, and this is a weekly chart. So each one of these fat candles is a weekly candle. So there's a lot of like back and forth within that during that week. But as long as the weekly candles are forming this technical cup, once it hits 12, it's going to go be like this. It'll hit 12, and then there's going to be a handle, and then the stock will, the profit takers will come out like us, and then the stock will resume its normal direction, depending on whether it can break out over 12. So yeah, so this pattern symmetry type of stuff happens a lot, guys. All right, and that's just that's just a projection, and that's on the weekly charts. Any quick questions I can answer, because got to keep this, got family stuff to do. So I'll certainly like to answer any quick question before we.
I have a question
Go ahead, Serge.
about the volume of the options. Is it a cumulative volume during the day?
During the day, it's cumulative volume, but then there are adjustments between the buys and sells at the end of the day. Yes.
Okay.
During the day, it's cumulative volume. Like the more they're buying, you can see it go higher. Now, I don't know if that's the total volume of options when you look at an options table for all the exchanges. There are different options exchanges, but I just kind of look at that because some people say, hey, there are other exchanges they're not showing there. But whichever the case, it's a pretty good indicator of cumulative volume for options when you look at the options table. Correct.
Okay.
Yep. So did everyone understand the question Serge asked?
Yes.
Okay. Anyone who didn't understand, I'm not going to explain. I'm just kidding. I don't want to get into it. He's simply saying, does the volume add up during the day if more calls are being bought or puts are being bought for that matter? And yes, it does. And then they're adjusted at the end of the day based on the overall thing. So here's your daily chart, guys, on this baby. And the daily chart is also the same type of pattern. There's a gap. That gap is into the $10, sorry, not $10, $11 range, and this is the gap that it wants to get into. So honestly speaking, this is where the fight begins. Does it get into the gap? Looking at the overall picture, yes, it does. But it is now at a major resistance. You can see that. So there could be some backing and filling, and I'll be a buyer as long as I am seeing the moving averages. I want you guys to see that too. The moving averages turning around, and I will show it to you. And hopefully you all make a lot of money and smile without having to wear braces. How about that? Okay. So you're not to pay Smile Direct Club to smile. You're just looking at your P&L saying, okay. All right. all kidding aside, look at these moving averages. The 34, the 50, the 20, they all seem to, looking at it, just very simply, they all seem to be, the 5-day moving average is moving very nicely. And the 5-day moving average, by the way, can be as low as $7.34. That's almost 10% lower, a little less than 10%. So don't freak out. It's moving up nicely. So you want to be a buyer as long as the moving averages are trending higher. Okay, so this is trending higher, so that's a plus. This has now the blue line is always the 20-day moving average. It's crossed over the 50. Very nice. That's a plus. The 34 is curving up and wanting to cross over the 50-day moving average. That will all happen if the stock crosses over $9. Okay, and once the 34 crosses over the yellow line, generally crosses over the red line, which is the 50-day moving average, you get a price spike. Look, right now they're just starting to turn. You guys can see that? They're kind of doing this, right? So if somebody's waiting for the crossover, then and they're not in the stock or the option, then they should be ready to pay much higher prices. Much higher meaning, hey, a stock moving from 8 to 10 is what percentage move for a cheap stock? Come on, guys, quick. If a stock goes from $8 to $10, what percentage move is that?
10%.
No, more than that.
You must have gotten a 0 on math, man. Seriously.
22, 24.
25%. Come on.
25%.
Yeah. Like I always say, bust people's chops. I said, no wonder we suck in math, and then we blame the world for us. Let's make America smart again, all right? When it comes to STEM education, we can't even do simple math, and we're like adults. Think about that for a minute. It's a very sad commentary for American math education. All right, not to insult any of you guys, but seriously, if you've been an options trader and you can, this is the way you do it in your head. Okay, I'm going to teach you. Real simple. 8. How many 2s are in 8?
4.
Thank you very much. So there are 4 2s, right? So that means they're a quarter. Okay, it's a quarter. 4 quarters make $1, right?
Yes.
Exactly. So that's it. It's 1/4 of this. That's it. You got to be fast on this, because I'm not talking about this simple math stuff. I'm talking when it comes to options, and when you guys really get into like advanced options trading and you got a bunch of positions running and stuff, you got to figure out like real quick, okay, this is all right, seriously. Yes, 25%. So if the stock moves up 25% from 8 to 10, that's a big move. That's a big move. Now the stock has gone from 4, little less than 4, to 8. It's already up 100%, but it's got it's still got a lot of room to move. So that's it. Happy Mother's Day to everyone. Go treat your loved ones well. And I'll be doing my Sunday webinar. Very important. It's most probably going to be around 9 p.m. when the Chinese markets open. It's very important, and I like doing around that time. I'll keep short, sweet. I'll put out some projections where the markets are going, and in the meantime, just look at my other charts, and I still think the S&P 500 is going to 3,018, 30, 20. It's all on my charts. But we'll look at tonight and see how things pan out, how the futures open. There's still money to be made, but people are getting a little happy right now with the market. And you know what that happens on a technical basis. They're going to slam it. And I believe the slam, I'm giving a little hint, I think the slam is coming a short, quick, straight down. Put some real fear of God into traders. Okay? And I'm going to love it, because I'm going to buy a lot of stuff real cheap again. Is coming sometime by I would say by the 3rd week, or maybe early 3rd week, there'll be one, and then in June there's going to be a real slam down. Just the slam downs last 2 or 3 days, but I'm talking like 2,000 points. So get ready. All right, that's it, guys. It was a pleasure. Have
All
a
right,
good
thank
one.
you, Frank.
Enjoy the day. See you guys later. Thank you.
Thanks,
Thanks, Frank. Bye.
Thanks.
Have a great day.